What do you think of Taylor Swift's new album?
I've heard it is life-altering, but I have not listened to it.
Life-altering? Okay.
Right, still not.
Where's the music at, man?
Want the music now?
No music? All right, let's do this thing. Hey, welcome to the Closing Beat, everybody. Happy Monday. How you doing out there? Hope you had a good weekend and you're ready for a short week. The stock market is only open for the first three. So really, it's open Monday, Tuesday, Wednesday. That's a half day Friday, typically a positive day. I'll show you that here in a second. But it'd be a short week. And typically the volume in the stock market is less than half of what you normally see, so normal trading environment. So with that in mind, what happens is you tend to get really interesting starts to the day, nothing, then really interesting finishes, meaning it doesn't take a lot of volume to push the market one way or the other. And kind of saw that today. Not really a big move, but at the end of the day, you got a little sell-off there. We are, for the most part, we were celebrating Jerome Powell becoming the Fed president, or at least getting another term, as I believe that was confirmed today. So the stock market was mostly higher throughout the day, which is typical for how we start the Thanksgiving week there. We like to follow the markets here because we're financial advisors, but we're financial advisors that actually invest. We actually build our own portfolios, custom build portfolios with stocks, and sometimes we use ETFs. And so we're always paying attention to a lot because we have aggressive portfolios and moderate all the way down to conservative and retiree type portfolios as well. And so one of the things that I like to do is just kind of share how the day went, come here with you guys and hang out. And a lot of times I'm referring to positions that we have, adjustments we may make, although I can't say that publicly. And so I like to just kind of show that, hey, we're actually keeping track of the day-to-day. Not that we're making decisions day-to-day, but we're keeping track of things. One of the things that we're keeping track of is earnings season. Basically over, right? We had Walmart report last week. We normally see earnings season start with the big banks, JP Morgan and so on, Goldman Sachs, and it ends with Walmart, right? Or sort of unofficially. There's still more names out there, but earnings season, if you measure the bulk of earnings season, you look back over the last 10 years, we've actually, it was a good earnings season. 69% of stocks beat on earnings, 68% beat on revenue, whereas the average is 59 and 56% respectively. Over the last 10 years, this performance, I should say, the performance of the market during the earnings season there ranks in third. We gained 7.05% during the last quarter, or this quarter's earnings reporting, and the best was in the second quarter of 2011. The market gained 8.86%, and then in 2014, 7.64%. So it came in third. All in all, not bad in terms of beat rates, in terms of performance, in terms of average stock performance on the day that they report earnings there. And if you look at the performance of the market for the rest of the year, anytime there is a 5% or more gain during earnings there, it's basically a coin flip. I was going to try to put together a little something for you, but there's no real significant data there in terms of, hey, the rest of the year or the next quarter performs great. There's an 80% chance of success. It's actually 50-50. So that's not very helpful. So I won't share that with you there. If we're taking a look at the S&P here today, as I was just showing, we didn't hit a new closing high. We officially have 66 new record or all-time record closing highs for the year. We're looking for number 67. Currently, we're on pace to be able to hit 75 to 77-ish, given how close we are to record highs again. If we hit 75, that would be the second most ever. 77 new all-time record highs is the record set back in 1995. So is this going to be a record year? We'll see. One of the things you're not going to see is likely a lot of that happening this week. Here is the performance of Turkey Day, Thanksgiving. I hope everybody's got great plans, ready to spend a lot of money on your turkey. I hear they're expensive. But if you look, Monday is typically the only day of the week that is negative. And so today's market sell-off at the end of the day almost hit that right on point, right? It was like, wow, how is that, man? You look at, I'm going to get comfortable if you don't mind. Let's hang out a little bit today. So if you look at the performance of the stock market today, just slightly down. Mondays typically down. The rest of the week, remember, there is no Thursday. Markets are closed for Thanksgiving. Tuesday and Wednesday tend to be positive. These are really boring days right here. I'm just telling you, this is like that in between Christmas and New Year's time. These are some boring days. Hopefully we get some excitement. We're still going to be here and kind of playing along with you. But you got an average gain of 0.22%, 0.25%. And I should note that this performance comes from any year where the S&P is already up 20% or more going into the Thanksgiving holiday. I thought that'd be more relevant because we're actually in one of those years right now. So I wanted to be able to show, does the momentum continue? Does it mean an outperforming Thanksgiving? Does it mean nothing? And basically it's pretty flat week, which also corresponds to how the market moves in any given year when we go into Thanksgiving week. You tend to have a weak Monday. You tend to have positive rest of the days. Take Thursday off. Friday is a half day and just a quarter point gain, which we'll take. I mean, that's not bad for 1 week's returns there. The whole week tends to average a 0.31% gain. And so there you go. Just wanted to share that with you. If we're looking at the S&P for today, bank stocks. Bank stocks. Let's take a look at any of them. I'll type in Goldman Sachs just to show you here, 2.26% gain on the day. If you're sorting through a list of the different bank stocks, you really, it could be anywhere you look. It could be the regionals. There you go. Nope, sorry. Wells Fargo, I'm sorry. 3% gain on the day there. You got Travelers Insurance, so the insurer is doing well. This is because of rates actually rising there. State Street's one to point out. Very strong stock, by the way. Look at State Street also doing well, and that's because rates took a sharp move to the downside for just 1 day here. I'll take a look at a couple of those. You got the short-term notes actually almost making new lows on Jerome Powell, of course, becoming the nominee. And for the first time, this actually started to affect the big cap tech stocks. Really kind of interesting how that is. All the growth, large cap growth was by far the weakest area of the market. We'll call that a factor. So the weakest factor of the market today. If you look at the NASDAQ, hands down, the weakest on the day, the weakest after hours, the weakest towards the end of the day, finally saw some correlation between these big cap tech stocks, Meta or Facebook now, down 1.25%, the NVIDIA, another one there, down about 3%. And so rising rates, not good for tech stocks. Think of it that way, right? A whole host of reasons, right? Obviously, future valuations, cost to borrow, a lot of them are not profitable. And so not good for them. And it's one of those weird things that we haven't seen this correlation to rates rising, those stocks falling. But today was a very clear indication that people are paying attention to that. If you're an investor in large cap growth stocks, you are definitely, if not weren't before, you are now paying attention to rates as it pertains to your investments there in large cap tech. As far as the Dow goes, I don't have a lot to report here except for the winner for Guess the Dow. Cody's going to tell us who that was. Who was it?
Our winner last week was Mr. Nathan Putnam. He is a client, so that's back-to-back weeks with a client winning. That's exciting. He had a guess of 35,509. So good for him. Congratulations. We're going to credit his account $100. So congrats to him. Your winners this week, or your leaders this week so far. We got Aldo, Chris, Miranda, Jim, and Charlie. Those are your top 5. If you want to play, it's jazzwealth.com/guess the Dow.
Congrats, Nathan. That's awesome, man. Yeah, I love when clients win there, and I love when they want to credit their account. Now, I like Aldo to win this thing, but I don't think a client who has been in first has ever won by Friday.
I think you're right. I think
it's not good, man. The stats aren't with you there, Aldo, but I'll be cheering you on, and that's really all we have as far as the Dow goes today. Now, if you want to take a look, if you want to play, you're welcome to play. No strings attached there. People think we sell their emails or something, and none of that. We don't have time for that. The Russell, I want to point that out. Last index we'll look at here for the moment. Pulling back on top of support. A lot of traders, investors, long-term investors are going to look at this and say, I don't know exactly where, but I know this pullback is a gift. It's a reason to participate in a otherwise strong and waking up index there. So there you go with that one. Also, everybody always says you can't beat the S&P, and my argument is, well, there's another index that beats the S&P and in the long term actually beats it quite easily. Well, that's happening again. And there's your hint, because we were just looking at small caps there. So that's actually happening again this year, and typically does. What else can we talk about today? You want to see something cool real quick? And then I'll share some trade ideas that I had, because here's a fun indicator you can look at. We got all this news about housing starts and housing purchases, apparently still going really well there. A fun economic indicator. It's not perfect. It's one of the most perfect in terms of predicting a recession, though. Almost every time, this is housing starts. Almost every time when housing starts are declining, we enter a recession. Declining recession, declining recession, declining recession. I think this is the only one in the last, I think that's the only one, period, right? Because in the background, every one of these gray areas is the recession. No, there's two right here, because we fell afterwards, and that's just because of the virus. So there are two times where that wasn't happening. Well, right now, we are not declining. Right? If you take an average, most people won't look at the month-to-month performance. They'll look at like a 3-month moving average. And if you look at that, obviously we're trending higher here. So housing starts are a very good indicator of, is the economy headed for a recession or not? And right now you'd have a hard time suggesting that, even with high prices pending, rising rates and the Fed tightening and all that stuff, housing starts are still strong. So it's kind of a fun thing to look at. Now, this is good news for the home builders still, right? So you got that momentum still in Toll Brothers, even with rising rates there. Hopefully they pull back. Lennar has been on a tear lately. You kind of hope for that to pull back as well. Meritage Homes is another one. They're extended in the short term, but why would the momentum stop if these pull back, right? So you always say, right, oh, this is doing so well. If it pulls back, I'm a buyer. But what happens? It starts to pull back and you go, I don't know, this time's a little bit different, right? Well, think about the bigger picture. Why would any momentum stop in the home builders unless there's a really, really sharp increase in rates, and it's just not happening, right? So you now know, you look at something like this and say, pullbacks should be buyable. Maybe not in Pulte Homes, because that's the weakest out of the group. So there's kind of your lesson for that one. Okay, anyways, let's talk about new highs and lows for the day. All right, I'm going to include, I felt like shopping a little bit today. So a few trades I'll point out. These are not recommendations or anything. I'm just letting you know what I'm doing just for fun, little side fun. We're not short-term traders here, so I'm always hesitant to bring that up because people think we're short-term traders. Not the case. First up, we got 50 new highs, 10 new low. I think there was a 11th new low by the end of the day. First one up is PayPal. This is a waterfall drop, right? Obviously, just a clear, extended, oversold waterfall, climactic, parabolic, call it what you will. But a big sell-off here in this one today. And, well, let me catch this up here. So I thought it'd be fun to sell some puts. Sold the 175 puts there. It had the highest return on capital for at least today compared to any other position that I put on there. And why would PayPal just all of a sudden fade away, right? So if you're a short-term trader, you're like, all right, I see the extended move here. If you're a long-term investor and you want to sort of piece into this a little bit, why would they just fade away? What's wrong, right? So they didn't buy Pinterest, big deal, right? That was a rumor, it was fake, it wasn't real. Are they worth 36 times forward earnings, right? If you take a look at some of the fundamental analysis there. In the short term, doesn't matter. It's just a quick trade, hoping for a quick bounce there. Like I said, it was a high return on the capital that's not currently being used. And of course, you guys always think about that, right? Before you put on a trade, you don't just put on trades for no reason, right? You have a reason for putting on a trade. You know what your return on your capital invested is, right? Pepsi made new highs today. I point this out because you have Pepsi and Procter & Gamble. I put those two on the list. You got some consumer staple stocks starting to wake up. Remember, consumer staple stocks tend to wake up when there's fear of weakness in the overall economy, and they tend to do poorly when we're all like focused on growth and their obviously earnings are great. Well, we got these two stocks here just starting to wake up, so they made new highs today. I thought I'd put those on the list. You've got Best Buy here. It's up 15% in the last 1 month there. Doesn't mean it's extended, actually. If you are a research member or a client, you go into the research site, look up Best Buy. How often has it gained 15% in any 1 month period? What happens going forward, right? Actually, it does quite well. So this one has a habit of liking to push the envelope on the upside when it gets extended. So you're a little cautious there. However, big topping tail today. You hope to see something like that pull back. What was the other one? No, it's this one. New highs. We got Home Depot. So Home Depot very extended here. If you do the same thing in the research site, this is one where I decided to sell the 425 calls going out to January, right? Because December's sort of close by. Sold 425 calls on that one, looking for this to pull back and or go sideways, which is typical of Home Depot when it gets as extended as it currently is. So using stats to kind of back that one up there. And before we move on to stocks in the news, how about a lesson? I was just thinking, how about a lesson? So here's Baker Hughes, BKR. So it was one that I wanted to start a position on. I like the pullback. I've been mentioning to you guys pullbacks, right? Oil stocks are pulling back. Look for ideas. Well, how do we go about analyzing something like this? And this is sort of a glimpse into what we're going to start offering our clients, which is sort of an office trades kind of a series here. And I just want to talk about this for a second. So I actually sold the $21 puts on this one. And I get the question all the time, how do you decide? Like, what do you do? Well, I actually sold a couple $22 puts as well, just for fun. But so you got the $21 puts in here. How do you decide what you're going to do on this one? How do you choose the strikes there? Well, what I did is I looked at this. You go, all right, we hit a high, a little short-term high right here, right? And if we were to fall down to 21, how far would that be? So just go like this. There you go. It's about 17%, right? Now, if you look, your break even on those by selling for, I think it was 85 cents, your break even is down here. Actually, I think I got 75. Average cost is 75 cents. So 20.25 right there. That would be my break even on this position. So in other words, it would have to fall 20% from its most recent high, right? So I said, well, look, what happens if it falls a little further? What happens if it falls 25% or something like that? How often does it fall 25% in a 60-day window? Now, why would you use a 60-day window? Because it's the January expiration. I believe there's 60 or 59 days left to go. So I said, okay, if it falls between now and expiration where I would be in trouble or need to roll or do something, how often would it fall 20 to 25%? And so I looked that up in our research site and took a look to see what happens there. The interesting thing is it doesn't happen often, right? So it was like 28% of the time that it would fall 25% or more in a 60-day window. So, all right, the odds are it's not going down here except for about 28% of the time. Do you already like those odds? Yeah, it's better than 50-50. If I buy the stock, it's 50-50 shot, right? So you go, okay, 28% probability of being in some kind of trouble just using the research site instead of the options chain. Okay, the second thing is what happens afterwards? What happens in those times where it does fall 25% or more? If you look at the forward performance, it's actually quite positive. Over 60% of the time, it's up 8% on average. So what that makes me do, and I'm rambling here for some people that don't understand it or don't care to learn, you have the possibility of hitting $21, falling further to where I would get to my break even, right? Very low probability, but it could happen. And if it does happen, then the forward 60-day performance is actually quite positive. So what does that mean? It means that selling those puts at this particular time means that if I have to roll out to February, March, whatever it is, I'm putting the odds in my favor for the returns on the recovery back. So if I'm horribly wrong on this trade, the forward performance actually should help offset that. So that was kind of how you put that together, just piece by piece, instead of just blindly picking something. But you could do that too. Some people like to do it that way. So that is that. We'll do the stocks in the news. I'll take your questions if you have any. There we go. Okay. Uber in the news there. They're going to start delivering cannabis in Ontario. That's how bad it's getting out there. They're losing more and more money. And so I guess in Ontario, that's something different they can do. That, hey, give us a call. We'll pick up your pot and we'll deliver it wherever you'd like. I guess that's their news, not mine. I'm not, I don't know what to tell you. ATVI. So ATVI in the news, the CEO would consider stepping down if he cannot change the company's culture. What's wrong? I mean, first of all, what's wrong with what's going on? Separate. Put that aside, right? The whole internal possibly hiding sexual misconduct claims in addition to what they've already tried to figure out. All right, that's wrong. The stock, the company, the profitability of the company, everything's good here. This is a stock I'd be willing to own, both technically and fundamentally, a discount, right? So if we're trading at a fundamental discount, a technical discount, if this is a highly profitable company, actually, like 28%, 29% profit margins, then to me, and even though this was a late trade, I sold the $55 puts today. Like I said, I felt like doing a little shopping today, and I was late to it, so I didn't catch it on the way down. But nonetheless, you got a reason to own a stock that's technically discounted, fundamentally discounted. I don't think it goes to 55. I think I'll just make a little bit on the options here and be done with it. But we'll see. I mean, there's a lot of news revolved around it. Volatility's higher, something to look at. Cisco, Barron said that this decline here makes it look cheap. I don't know. I didn't really study it there, but that's what Barron says. Stock's up 2.5% on the day. I believe they said the same about Macy's. That's why I have that on there. So Macy's said that Barron said, even though it's run up this much, it's worth buying at these levels. I kind of disagree with that one. I would try to buy it cheaper, but I don't disagree with what Macy's is doing and the value they're trying to get back for shareholders after all that hassle there. Monster. There you go. Monster in the news. Bloomberg says they're considering merging with Constellation's brands, which would be STZ as a ticker symbol, so you can see the volatility over in that stock as well. I believe this one. I think this would be a good merger for them, and I can kind of see where it's favorable for existing shareholders of Monster, but also long-term growth here for Constellation, because I got to do something there. What else do I got for you? Earnings tomorrow. You got Abercrombie & Fitch, Aeropostale, Best Buy, Burlington, Dick's Sporting Goods, Dollar Tree, Autodesk, Medtronic, Dell, HPQ, Nordstrom. Was it Nordstrom that they raided? No, it was Louis Vuitton, right? Did you see that? It was like a Nordstrom in California or something. There were like 20 people that just put masks on, ran into the store, grabbed everything they could, and ran out. Got away with like $100,000 worth of stuff.
Interesting business model over
it's
there.
A different way about shopping. I'll give you that one. But isn't that kind of brilliant by the people that did that? Like, let's just mass. It's like the old days when they rob a bank. They just everybody run in there and do it. I'm not advocating.
They're practicing for Black Friday?
Maybe Black Friday. They had to get ahead of it. Right? Yeah, that's true. Who wants to wait in lines? I just go in with my buddies and take everything. I think it was Nordstrom, but obviously not a funny joke. But obviously tough times there for them. And Grammarly apparently going to try to go public. Cody, how much do you think Grammarly is worth? Just hypothetical guess, because I wouldn't have got it right either.
I don't even have a guess.
You think it's worth $1 billion?
Tell me more about Grammarly.
Oh, you don't know Grammarly? That's the thing on. Okay, you don't use it? No wonder everybody always says Cody sounds stupid.
No, I have great emails. Thank you.
Oh, it's the thing where if you're typing, it recognizes that you're not typing right, your sentence is incorrect, prepositional formats, spelling, and it fixes it. I look amazing. It looks great. I type out stuff all the time with big red line underneath it. So for me, it's worth every penny.
I don't know.
That's basically what they do. They say they're worth $13 billion. Yeah, I don't know if that's good value or not. Actually, I would have never guessed $13 billion, to be honest. Perfectly honest. That's impressive for them, though. But for as smart as they make me look sometimes, but then again, you guys know, right? It's like if I write an email and it's like all perfect and everything, then I show up here and I'm just talking. I can't even get my words right. You know. Oh, man. You hope for a Santa Claus rally, big crush next year? Okay, yeah, we'll see. If rates continue, now I don't see that happening, but if rates continued to kind of spike as quickly as they did today, just day after day, I think you'd get your pullback sooner, but I think the Fed's got that under control. Yeah, Professor Dustin up in it. Yeah. Well, Macy's is looking into a whole bunch of different things, actually, with the way they're maybe gonna spin off their digital business. It's sort of a raw approach to breaking apart the company, but I think people are buying into that. Mm-hmm. Hey, Dustin, what changed today in your opinion that we saw tech stocks responding to rising rates? I don't know. I was mentioning that last week, that usually there's this correlation. Usually that you would find weakness in tech stocks sooner, but they were still leading and pushing everything higher. I actually don't know. You could maybe attribute it to money coming out of some of the underperforming areas, the consumer staples that didn't do bad, they just didn't do great. It's one of the worst performing sectors for the year. And when I say that, I don't mean that they're down. If you look year to date, consumer staples still up 9.6%, but that's the worst of all of them. So it could be a little bit of rotation there as we go into the end of the year. I actually didn't know. I thought for sure that was it 2 weeks ago? Back here, when you saw this quick spike in rates, right? That Fed tapering talk. I thought for sure, all right, here we go. Tech stocks are going to be kind of weak. Nothing until just today. So I don't know why the change. Yeah. Well, Chris has got a point there. For every free app, you must be the product. I helped them make $13 billion apparently, or be worth $13 billion. Oh man, yeah, I know. For me, I type like I talk, so I just fly, man. I'm a drummer, right? So I'm making music with my fingers. I just type it out, and I just sort of think like, that's cool, right? If it's not perfect, are we good? But it helps. It helps me a lot. And I have always had this habit of words like weird, believe, things like that, where the I and the E, in my mind, I know how it's spelled, but I type it wrong every time. Every time. So I always see that red line and I say to myself, like, you can learn so many things. You can't learn this? Come on, man. I know. Thoughts on Clorox? Got earnings coming up here. It's usually uneventful, but you're probably hoping for it to be a little bit more eventful. The problem is it's without the virus out there and everybody buying bleach when we initially did that, it's nothing consistent with them. So when you look at earnings, it's always like 60 cents, $1.42, $1.15, 90 cents or something. It's very hard to get anything consistent with them. Yep, you accepted employment with your previous employer. Does the 401k that I transferred to affect, or can I continue with? That's an interesting one. So you accepted employment with your previous employer. So you're going back to your old job from a new job. You have a 401k. You took it to the new job. Can you leave it there, or can you bring it back to the old job? I would just leave it there. If you like the investments there, I don't know about Transamerica. That's usually not my favorite, but if you like them there, you can. Otherwise, if you just want to put it back where you came from, that's a lot of work in 1 year, but yeah, you can. You can move it back if you want. ATVI, January. Everything was January today. So anything I mentioned, any positions, I think I got them all. I was talking about January. Yep. I know. All right. I've done my part there. I will be back tomorrow. We'll do this all over again. And thanks for hanging out with us today. Hope you had a good day. Hope you have a good evening. And we'll see you tomorrow, right? Adios.